China's slumping property market has been a drag on the economy, and the real estate rot has some of the country's biggest companies now looking abroad. Well, Chinese investment in properties overseas is expected to surge 21% this year. That's according to real estate service provider Jones Lang LaSalle. The property firm expects the total amount to hit $20 billion. China Minsheng is the latest company to develop property abroad. It's spending $1.5 billion to build a new commercial district in London. Last month, Ping An Insurance also bought an office block in London for more than $500 million. Another conglomerate, Dalian Wanda, bought 2 buildings in Sydney, Australia for $1 billion. And 2014 was, in fact, a record year for commercial property acquisitions by Chinese insurance companies. They've been on a spending spree over the past few years. The industry spent roughly $15 billion last year. Now, that's almost 3 times as much as was spent in 2012. Karina Huber has been following this. She joins us with more. Karina, Chinese investors are snapping up so many iconic and trophy properties, including New York's Waldorf Astoria.
Yes, an iconic building for sure, Michelle. It probably was the most high-profile deal last year. Anbang Insurance bought the Waldorf Astoria from private equity giant Blackstone for more than $1.9 billion. Now, it was the biggest hotel purchase in the U.S. for the year. And Anbang beat out bids from buyers in the U.S. and the Middle East by offering its asking price before it was even officially on the market. Now, it's just been announced that Starwood is selling the Baccarat Hotel to an affiliate of Sunshine Insurance Group, which is China's 7th largest insurer. The Chinese insurance industry, just so you know, Michelle, is dominated by state-owned enterprises, and it's offering top dollar for properties. And it can mainly do that because it has the backing of the Chinese government. I spoke to Jonathan Miller. He's a real estate expert here in New York, and this is what he had to say about the market impact created by the influx of Chinese buyers.
The interest by the Chinese in the commercial property market here in New York has essentially escalated the growth in prices because inventory has been chronically low for several years. There's more competition with the Chinese looking to buy here.
Now, according to CBR Group, office prices rose 11% here in Manhattan in the first 9 months of 2014. Now, Miller says there has been some resistance to the Chinese buying up marquee properties in the U.S., much like we saw back in the late 1980s when the Japanese were the big buyers. And, of course, that is to be expected. Whenever a foreign country buys up prime property, people tend to raise their eyebrows. Michelle?